welcome to a brand new episode of Malabar Gold, the Golden Truth, an initiative by Times of India. With rupee having crossed 80 to a dollar, the gold duty imports have now risen to 15% from 10.75%. to, in fact, curtail the current account deficit. Now, keeping this in mind, we're going to have this very special discussion with our guests joining us on the panel to hold an in-depth, detailed discussion and get to the bottom of the tax and duty structure and the role of gold. Let me quickly introduce to you Mr. Nand Kumar, CFO Malabar Group. We also have Mr. Nitin Khandelwal, Chairman All India Gems and Jewellery Trade Federation. With us is also Director Public Finance India Ratings, Mr. Sunil Sinha. And with us is Senior Director CRISIL Ratings Limited, Mr. Anuj Sethi. Thank you so much for joining us for this very special discussion. If I may begin by asking you, Mr. Khandelwal, this. We can't say that we've left COVID behind us, it's back in the news. But in this particular phase of post-COVID, if I may call it, how do you think have we, as an economy, regained our momentum? And what can we do to truly once again label India as how we used to call it the Sone ki Chidiya?
So subject is very interesting and relevant because the budget is on ahead. So after this increasing duty, there are 3 to 4 rates in the market. And basically 2 major rates. One is official and one is unofficial. Because if you see, when Indian government started importing gold, duty was 10,000 rupees per kilo, not in a percentage. Now it went to 10 lakhs rupees per kilo, from 10,000 to 10 lakhs rupees, because the 15% is import duty and the 3% is GST. It is going to affect more than 18%. And now the gold rate is India is 53 to 55,000 net effect. So it is very lucrative for the illiterate people to go and buy from the organized to unorganized. So there are 2 rates that are facing very big problem in the organized and unorganized jewelers because the 9 to 10 lakhs rupees duty is affecting. And second, there was some duty concession given to some of the countries in the SEPA. So that is also going to affect. And some people, I heard that they are import gold in the name of the platinum also. That there are 3 effects in the gem and jewellery sector.
Okay, all right. Mr. Nand Kumar, now as I began by asking, or rather talking about in the opening, that the gold import duties have been raised to 15% from 10.75%. That's quite a margin in itself. What do you think can be done by the government? How effective do you think is this step to really keep a check on the trade deficit and more importantly to ease pressure on the rupee?
So we can historically analyze the gold import to India because you look at last 5-6 years numbers, it was moreover hovering around the same level of 850 to 900 tons. And July was the month where we got the steep increase in the import duty hike. That too, in the second quarter, you can see the growth in the Indian jewelry industry, and all the retail has performed relatively well. Over 40% was the increase YOY. So that gives a flair that the consumption, rather the investment in Indian jewelry, rather the Indian individual investment in the jewelry has not much impacted with the duty hike. People keep on investing, but at a high cost. And this actually incentivized the movement of inventory, rather bullion, through unorganized channel, or very precisely say illegitimate import has been increased. Some of the studies, couple of weeks back, we have seen some media reports, and some of the studies by IIM Ahmedabad says that they expect during the current year, we expect around 30% of the legitimate route. So 30% will be the illegitimate route compared to the legitimate route. Okay. So this actually incentivizes the other part of it. Whether it has an impact on current account deficit or payment is one part of it, but we are strongly supporting a parallel economy is on the other part of it. So, as the first speaker said, we are now seeing a different 2 rates in the organized sector and unorganized sector. And being in the organized sector, we every day morning the nightmare is what is the rate difference and how we will work out towards that. That is the current day's challenge.
Okay, and while organized jewelers, of course, have a big role to play, and since you spoke of this aspect, let me quickly ask Mr. Sunil Sinha this. In your view, Mr. Sinha, have the factors that have had a bearing on our economy, and it can't be said without mentioning demonetization and GST, do you think they've had an impact for the good on the sector at large, especially if we talk about making it more organized and transparent?
Well, if one looks at the gold economy in India, it always had two parts. I mean, one which is the formal or the organized sector, and the other part is the informal or unorganized sector. And obviously, the policy that has been pursued over the years is that whatever trading or activity that takes place with respect to the gold should be done in a more legitimate manner, so that the government also gets its tax revenue out of the activities which are in and around gold. But having said that, I guess it needs to be understood that in the larger context of the Indian economy, the gold can be understood or viewed both as a good thing or a bad thing, because most of the gold that we consume is actually imported. And higher gold import simply means that it will put our current account into some kind of a pressure. On the other hand, let's also not forget that gold is such an important part of the overall economic activity, particularly gems and jewelry sector, where a large scale of employment is generated. A whole set of people is dependent on their livelihood is dependent on this sector. So unilateral view of this sector cannot be taken. So it has to be understood in the larger context, whereby the gold should be promoted in a way that it, on the one hand, does not go overboard in terms of increasing the current account deficit, but at the same time, it also does not, create a scenario where the livelihoods of a very large section of people gets impacted.
Okay, so it has to be a balancing act, like any other. Great. If I may bring in Mr. Sethi into the conversation as well. Mr. Sethi, now we do know that gold is on a very common logical level always in high demand. But do you think factors like price rise, like inflation, have a direct impact? They do end up denting the demand rate. And what, in your view, that then can be done to ease that kind of pressure?
Yeah, see, there is a study which says 1% increase in price dents demand by about 0.5%. And 1% increase in income actually increases the demand for gold by about 1%. So there are well-established studies to, give this sort of guidance. I think clearly, in the past couple of years, I would say rural demand actually, which accounts for roughly 60% of overall gold demand, has got impacted a bit because of the COVID-like situation. And slower than expected, rise in the agricultural incomes also. But clearly this year onwards, we are seeing that this is changing with better income availability and also COVID largely behind us, not completely out of it, I would say. I think there is a increasing spend which is happening not only in the urban cities, but also all across rural India. And that is evident from the huge festive.
No, you mentioned rural areas, sir, Mr. Sethi. Inflation, you're saying, does make it difficult for people, of course. Logically speaking, makes it difficult for people, especially in the rural areas, to allocate to gold, which further, of course, impacts the economy. But there's a problem there. How does one address it?
See, the earlier priority was to on health and also on food. Now, but with food inflation also cooling off, and better incomes now thanks to the government's investment, increase in MREGA allocation, etc. And the fact that even the organized players, the jewelers, they have managed to reach the tier 2, tier 3 and tier 4 cities. I think that has also resulted in a demand. And of course, now with the festive season plus the wedding season being there, I think there is a strong pent-up demand which we are seeing from the rural side also. In fact, we are seeing in some geographies rural demand has been much stronger than urban demand, which goes to see that if income is available, I think gold will be a preferred option always because it is considered a very safe investment.
Mr. Nandkumar, now very recently I had a detailed conversation about the gold monetization scheme. The ultimate intent of the sector on its part is to make sure that the reserves are maximum and the impact on the economy of imports is minimum. Now RBI's reserve is also extremely plush at this point in time. We've seen how RBI is aggressively buying gold. But we're still behind, let's say, countries like Germany, Italy, France, Russia, China. You think in years to come, given, how much imports do we really rely on, you think we can surpass that number?
Very interesting question, because now we evident that even the central banks are relying more on gold investment in a shaky economy like this. When the economy pressure, inflation pressure comes, even the central bank follow an investment strategy like this. Definitely the individual investor can also follow the same thing. So the demand is always going up only. So last 1 year, rather you have seen the RBI is more interested to invest into a asset like gold inventory. I'm not surprised if we move a couple of steps ahead in taking another 8th or 7th position in the gold reserves compared to our current 9th position.
Okay, Mr. Sinha, we've been talking about aspects such as inflation, price rise. We've touched upon several factors that have had an impact on the economy, the GST and demonetization, of course, on the priority as far as those aspects go. But if we talk about GST on jewellery trade, has that changed the way manufacturers and retailers deal with each other? Has it made the sector more formalized? And is that helpful in any way?
Well, the intent of any government would be to reduce the footprint of unorganized sector and increase the footprint of formal sector. So obviously, GST was a step in that direction, and post-demon, post-GST, and post-COVID, we have seen that the footprint of organized sector in the overall economy has actually gone up. And many of the unorganized player for various reasons, initially because most of their trade was in cash, so demonetization impacted them badly, and many of the small players post the GST found it very difficult to kind of obtain the input credit and so on and so forth. And then came the COVID, and which also in a way impacted the unorganized sector, because they could not obtain the credit from the formal sector, which was rolled out by the government. So all of these things have certainly impacted that sector, and the footprint of organized sector has increased. The other thing that I guess is very important is that gradually there has been a greater awareness amongst the customers of gold that purity of gold is as important as holding the gold. And in this regard, various attempts made by the government has been to ensure that the gold that you hold is of certain quality. So that also meant that the shift will happen more towards formalization rather than doing most of the business in the informal sector. So these things have certainly played out, but to expect that the golds, will become eventually a formal sector play is also not possible, given that the kind of setup we have in India, we will always have some bit of play happening in the unorganized sector, whereby people will try to kind of evade the tax net and so on and so forth. But I think in general, if you look at the overall scheme of things in the last 20-25 years, then things have improved both for the government as well as for the players who want to deal with gold in a more structured and formal way.
Okay, perfect. Now, since this conversation is based on tax and duty structure, and since I began by speaking of how, the rupee is nearing 80 to $1, and that's very concerning itself. Mr. Anuj Sethi, can the falling demand for gold imports then help the ailing rupee? Because that's what we're aiming for. We're trying to rely on less and less imports. We're trying to find out a solution. Even if we talk about the gold monetization scheme, we're trying to find out a solution in itself so that we don't import all that much gold, so that we're sufficient from within. Do you think that could be helpful enough and help meet the end goal?
See, like Mr. Nandakumar had pointed out, the gold imports in tonnage terms have remained more or less in the 850, 900, sort of range.
Right.
In recent years. They've not gone up much. What has impacted the trade deficit is the rise in price of gold, which has happened. But that too has settled now. And to be fair, gold is not the only major commodity which is imported. I think we have a bigger challenge in terms of crude, which is imported, and of late also fertilizers, then consumer durables, electronic components, even automotive parts. These have gone up quite sharply. So it's not fair to say that curbing gold imports alone would bring the rupee under control, because it has to be looked at in the entire basket.
Well, I also want to talk about a very interesting aspect. And I'll quickly bring in Mr. Khandelwal into the conversation to touch upon that aspect. Mr. Khandelwal, the biggest challenge for the Indian jewelers has also been securing bank credit, and that challenge has gone manifold, especially ever since the Nirav Modi, Mehul Choksi scams came to the fore. What do you think can be done about these situations? Because it certainly does end up denting the gold economy.
See, again and again, people are talking about the Nirav Modi and Mehul Choksi. One time when I was discussing with the government, they were asking that if you have the good rating, you will get the ample money. But let me remind you, the all fraud is happening in the AAA rating only, because unless and until you have AAA rating, you can't get the thousands of crore rupees loan. So it is not true. And there are only two examples. If you see, black ships are everywhere, not only in this business. The best thing to curb the safeguard our currency is to introduce a gold monetization scheme very effectively and with the help of the jewelers. As a All India Gem and Jewellery Domestic Council, we have series of meeting with the government. We have given, I told you earlier. So if you introduce that scheme with the jewelers and no need to import, I think we are having the 25,000 tons of the gold under the carpet. This is the official figure, because every year we are importing around 1,000 tons. 800 by legitimate and 2,000 by the unorganized and the smuggled is coming. This report says by the metal focus. To curb this all, gold monetization scheme is really need of the hour. And government has to come up with the clarity that how much gold one can declare. Because 1 kg, half kg, you need to give the window to the people to declare their gold, whether there's Strithan or by the dowry or by anything we have collected. That this gold should be, if you want to do in the legitimate way, then you have to give some window to the people, not to the...
And how do you propose the government can do that, sir, in your view?
Gold monetization scheme by end-to-end solution I have given you. If you allow me to speak in Hindi, I can explain.
हाँ सर, बिल्कुल बताइए.
देखिए, कोई भी आदमी के पास, जो किसी के बहन के पास या मदर के पास में जो गोल्ड है, अगर आप बोलेंगे कि आरबीआई में जाके डिपॉजिट करो और उसको जाके बीआईएस होल मार्किंग सेंटर पे जाके उसको चेक करो, तो इट इज नॉट इजी टू गो एंड डू दिस. सो यू हैव टू अलाउ देम टू कम विद दिस टू द ज्वेलर्स विल गिव टू द बैंक. जब गवर्नमेंट ने हमको पूछा कि अगर कोई ज्वेलर्स इसके साथ कोई गलत हो जाता है, तो हमने गवर्नमेंट को पूरा डिजिटल सॉल्यूशन दिया इसका कि मैं एज ए खंडेलवाल ज्वेलर्स 5 kg गवर्नमेंट का गोल्ड डिपॉजिट करूंगा. एज सुन एज आप मेरे पास आएंगे 700 ग्राम गोल्ड लेके, मैं मेरे डीमैट अकाउंट से आपको आपके डीमैट अकाउंट में कर दूंगा. आपके डीमैट में आपने चेक कर लिया, उसके बाद ही आप प्रीमाइसेस छोड़ के जाएंगे. तो इस तरीके से हमने गवर्नमेंट को पूरा सॉल्यूशन दिया. और गवर्नमेंट के पास जितना गोल्ड जमा होगा, गवर्नमेंट को नेचुरल हेज करना है, गवर्नमेंट को उसको हेजिंग कॉस्ट भी नहीं बेयर करना है.
Okay, so that's a lot of proposals for the government that we've managed to extract in this half an hour conversation. Thank you for that, Mr. Khandelwal. Mr. Nandkumar, now who better than you understands how the gold sector in itself is key to employment in our nation, also to the foreign exchange earnings. What do you think can be done on the government's part in that sense to make sure that this is a space which extracts maximum employment in the country? Because that's going to lead to an increase in the production directly.
Yeah, because that is one of the positive steps what we are also as a jeweler seen in the market, because as we all know, this industry employs nearly 8 million people. That too is rapidly growing in this area, the employment. The new generation, we are actually as a jeweler, we are pushing most into manufacturing area. And some of the actions currently taken by the government in the form of CPI agreement with UAE, as well as similar agreements with Australia, and your negotiation, rather the discussion going on for Canada and EU are very positive in this scenario. And the government and the Ministry of Commerce has rather put in target of around 70 billion by end of 2025. That is a very ambitious target, and I think in the current pace, with the help of all these agencies, we'll be able to achieve that. But as a jeweler in this in this market, we are very committed to the current logo Make in India market to the world, and we are investing largely into the manufacturing sector, and we are setting up factories across India, starting from Kolkata, Hyderabad, Mumbai, Jaipur, and Coimbatore. So all put together, we plan to look for a employment of next 2 years to 3 years, close to around 15,000 plus. And if the organized jewelers in this same way coming into the manufacturing, that will help making this area a little more what you call visible to the market, and with all these international helps and the treaties, will be able to showcase our product in a better way to the international market. So I think this current efforts by the jewelry associations and other agencies along with the Ministry of Commerce is working very positive towards this common generation.
Okay, so we have a plan in place and quite hopeful that we're not too far away from meeting the end goal. That's all the time we have, gentlemen. Thank you so much for sharing all your insights. A very special conversation. Thank you for joining us here.